The dollar recently resuming its March higher, something that we've seen steadily over the last couple of months now. It was sent higher amid a global economic fears and exactly what that looks like, some of the disparity that we've seen across the world. Now, we want to bring Yahoo Finance's Ines Frey to discuss a little bit more about those moves that we see. Ines, today we're seeing a little bit relief, but still not too far from those high levels.
Yeah, that's right, Shauna. And I want to show you a bit of the trajectory of the U.S. dollar, the Dixie. This is against a basket of currencies. It's just below 105. But we saw last year, about a year ago, we saw the dollar at multi-decade highs. You'll remember that equities were falling at the time. And then it went down. And back in July, this past July, if I pull up a year-to-date chart, you can see that it went down to 99. Well, over the last 9 weeks, it has really been rallying, a big move, and some analysts are saying that it's due for a bit of a breather. It's time for a pause. Now, why has it been going up? Well, investors are betting that the Fed may keep rates higher for longer. The U.S. has shown economic resiliency when it compared to, for example, Europe's underperformance or China's economic concerns there. And what does this mean, though, for U.S. multinationals? Well, a strong dollar is not great for companies that provide services and goods abroad because their products are more expensive compared to the local currencies, not as competitive. And we've seen that Apple and Disney, for example, have warned of these headwinds. Apple sells iPhones all over the world. Disney has its theme parks around the world. Now, last year, Credit Suisse put out an analysis that said that for every 8 to 10% jump in the dollar, that roughly translates to about 1% drop in profits for U.S. companies. Now, what this rally has shown you also is that despite a lot of talk about de-dollarization, BRICS countries getting together to put in a different reserve currency, well, look, there is still a large demand around the world for U.S. dollars. The problem is that if you do see the dollar spiking too much, that tends to cause problems around the world because a lot of debt around the world is in dollars, guys.
And Ines, while we have you, what can you tell us about the dollar, the Japanese yen, and why that's an important correlation to look at here?
Yeah, it's important because it kind of shows you the divergence between what the U.S. has been doing, and the Federal Reserve and the Bank of Japan. Because take a look. This is a year-to-date chart of the Japanese yen, up 12% year-to-date. That's a big move for one of the major currencies in the world, those major currencies being the dollar, the yen, the euro. And what this is telling you is that Japan has been continuing on with an easing monetary policy. Remember, they have yield curve control. So they have been doing that to help to save their bond market, basically. But they have also been feeling inflationary pressures as well. So they're kind of caught between a rock and a hard place, because if they don't tighten monetary policy the way the U.S. has been doing, this impacts their currency, and we're seeing it.